Alright, so I want to share with you guys two indicators that I have been using along with my strategy, supply and demand. So what you want to do is head over to TradingView, go into the indicator section, and you are going to type in super trend indicator, right? So it's going to pop up as super trend, the very first one you see, and it's going to look something like this. And then you're going back into the indicator section and you are going to type in 5-minute entry by Nix, intraday long and short 5 minutes. You're going to tap on that and it's going to look something like this all together. What you're going to want to do next is tap onto the super trend settings and you are going to want to make that 21 and it's going to look something like this. So it's not too much of a difference, however it will help you for when you're looking for trades. So let me explain to you guys how it is that you are going to use these two indicators together along with supply and demand. However, you can use these two indicators on their own. You do not need a strategy to use these two indicators together. So since I have a strategy that goes with it, as you can see over here, I have price that tapped into a higher time frame supply or higher time frame level of supply, or you can call it a point of interest as well if you want. So from this point in time, I expect price to continue to the downside, or if it wants, it can continue to the upside. However, this is my higher time frame supply, and I expect price to continue to the downside. So at this point in time, I'll activate my indicators, and then I will start using them to a point where I can find myself some entries or contracts to fill, right? So first things first, right? So as you can see over here, this is our very first sell signal. Okay, let me make it a bit easier. So what I'm going to do at this point in time is I'm going to remove the buy trend, and I'm just going to be working with the sell side since I expect price to be turning around at this point in time. And what I'm going to do is I'm going to remove the buy side of the 5-minute entry indicator, and I'm just going to leave the super trend sellers and the 5-minute sellers indicator, right? So as you can see, from the higher point of interest, the higher time frame point of interest, we can clearly see that from there price is interested in turning around, along with the super trend indicator that indicates to us that price is interested in turning around, as well as the 5-minute indicator as well, right? So we're never going to be able to catch a move exactly with this super trend indicator from the exact spot it decides to turn around from, unless you are trading supply and demand, which I have a strategy for. However, for people that do not have a strategy or that do not know how to trade a strategy, I'm going to show you in this video how you can use these two indicators together to make or give you a higher chance of making profits out of the market without knowing anything. But you might have to have a little patience for this indicators to work for you, right? So first off, as you can see, you have a super trend that indicates to us that price is now interested in turning around, right? So what you're going to do at this point in time is you're going to wait for the super trend indicator to pop up and tell you that it's selling, and then you are also going to wait for this 5-minute indicator on the 5-minute time frame that says sells are now ahead. So what you want to do at this point in time is you are going to mark out the 5-minute indicator. You're going to mark out the 5-minute indicator, you're going to pull it across. You can either mark out the entire candle where it formed, or you can mark out just the 5-minute indicator. You're going to pull it across, and then you can take shorts from there. Short sells till the next order block, which is just below over here, or you can target the lows from this point in time. You can target these lows for a take profit, right? So like I said, this is not it's not 100% strategy, it's a scalping strategy. So soon as you get in, you'd have to get out of this strategy as well. But since I'm using supply and demand, I would look for this level over here, and then I see a bit of imbalance below, so I'm going to pull it across. And since I have supply and demand and this 5-minute and super trend indicator on my side, I would have waited for price to tap into my imbalance and supply, and then I would have taken an entry from there, selling it to the downside, right? So not all the time we is going to be 100% accurate. You need to be able to identify when price is in liquidity, which this over here is liquidity, but that's a topic for another day. So you need to be able to identify when price is in liquidity and when to take these entries, right? So as long as you understand what I'm telling you here, is that you first need to wait for the super trend to pop up, and then the 5-minute indicator, you're going to mark out the place where the 5-minute indicator says that you can sell. You're going to pull it across, wait for that zone to get mitigated. You're going to instantly sell within that level. You're going to take profit within your next order block or your low, and you should be out. You should not be holding any trades. You should be getting out, since this is a scalping strategy that I'm teaching you. And so once again, you wait for your super trend to form, and then you wait for your 5-minute indicator to say that it's okay to sell. You are going to wait for price to retrace back into the level, which is the 5-minute indicator that says sell. You're going to mark it out. You're going to pull it across, wait for price to mitigate that level, and then take your short scalps of selling or buys into the direction the market is going, right? So let's do another example. So your liquidity over here, I would have waited for price to tap into my imbalance and my supply. Then I would have sold again from here. So now, as you can see, over here we have another super trend indicator, right? So first we have our super trend, then we have our 5-minute entry that says it's okay for us to sell. We mark that level out, we pull it across, we wait for price to mitigate this level. Once again, you are going to take your sells within this level, target these lows over here, or target the previous lows. Like I said, since we are now in a downtrend, it should be a bit easier for you guys to hold a bit longer if you know where the market is going, right? So once again, there's an entry point for us. We sold, we targeted either these lows, or these ones over here. Then price started going back up, which I'm sure we got another 5-minute indicator that said we can buy. But if you are trading supply and demand, you would have seen over here, this would have either been a change of character or a break of structure. And then if you know how to read the markets, you would have been able to identify that this over here is a supply zone, and you would have sold down from here, targeting these lows over here. And if you look slightly to the right side, you will see that the super trend and the 5-minute indicator comes in quite late, and you would have missed out a nice move on the markets over here. So once again, if you look slightly to the right side, you will see first we get our super trend indicator that says we can start selling from here. However, at this point in time, we are still unsure if we need to sell. So we wait for our 5-minute indicator to pop up, and then what we are going to do at this point in time, we are going to mark out that 5-minute indicator that says to us that we can sell. We are going to pull it across and wait for that price to get mitigated. You are going to drop your sells within that level, and you're going to target either these lows over here, or you can target some other lows that you want, but you have to get out on lows or order blocks, because this is a scalping strategy. It's not for holding. It's a scalping strategy, a 5-minute scalping strategy. So as you can see, the indicator works pretty accurately. If you have patience, you should be able to make money using this strategy on the 5-minute time frame. So I'm not going to do buys yet. First, I would like to see price shift into the new direction before I look for any buys again on the 5-minute or whatever time frame. For now, I'm just working with sells until I see confirmation or a change in price direction into the opposite direction, right? So once again, as you can see, at this point in time, our 5-minute indicator comes before our super trend indicates to us that it's sells, right? So as you can see, this one pops up before the super trend pops up. As you can see over here, there's quite a bit of space in between where the 5-minute indicator says we can sell and where the super trend pops up, and that makes it a bit more powerful for how you can use the strategy to make money. So what you're going to do at this point in time, like I said, you can either mark out the entire candle where the 5-minute indicator says that you can sell, or you can just mark out the 5-minute indicator, and you're going to wait for price to retrace into that level, and then you are going to sell. So I did say you can mark out the entire candle. So it doesn't matter if price does not get mitigated, you are just going to wait for a retracement close enough to this indicator. So it doesn't have to mitigate the level, you just want to wait for a retracement close enough to this indicator before you take sells targeting the lows or targeting the highs, depending on which side the market is going to. Alright, so I hope this is easy for you guys to understand. First, we wait for the super trend over the 5-minute indicator that indicates to us that price is interested in doing what it says. Then we wait for the second indication that says it's okay for us to now wait for price to retrace into our level and then sell from there. So if you look slightly to the right side of that, we have the indicator that popped up, but price never fully mitigated this level, and this is why I say it's a scalping strategy, it's not a holding strategy. So price retraces, but it does not mitigate this level. Price drops, and at a later stage price comes back into this level and then drops down again. Alright, so I hope this is easy for you guys to understand. So let's see if we can find ourselves some buys, and then I am going to end it off if we have established that buys works as good as our sellers. Alright, so let's take it, let's remove this one, let's apply the buyers, let's go into our 5-minute entry, let's remove the sellers, and then let's look for some buyers. Okay, so since price is still in the downtrend over here, I'm not going to look for any buys over there. So let's see if we can identify any buys. Okay, so over here, like I said, I'm going to wait for price to first shift into a new direction before I look for any entries to the buy side. So over here, as you can see, we have something like this. So we first have a high, we have a low, we have an internal high, and then we have some liquidity. We have a slight liquidity grab, and then price changes character to the upside, causing some more liquidity to the right side over here. And then we have another drop, and then another continuation to the upside. So this is an everyday image of what the market looks like. So this is just me showing you how to use the strategy. I'm not going to show you how to use supply and demand with this within this. So what I'm going to show you is one thing you need to be able to identify is that the moment we price changes character or shifts into a new direction, you need to be able to identify where price shifts into a new direction, which is called a change of character. And then from there, it makes the strategy or the two indicators, it makes using them a bit more easier. So let's call this our first change of character. And then over here, we have the first buy signal that changes character to the upside. So there's also something else I wanted to show you is that the Fibonacci. So if we was to pull our Fibonacci from this level to the most recent high, and we can, so if you look at the blue over here, in between these two levels, if you look at the blue from the Fibonacci to the first blue to the second blue, and then if you look over here from the first yellow line to the second yellow line, this I would call a 50% zone, and then this one over here is what I would call a premium. This is what I would call a premium level. Right, so then you can see price drops into our premium level, closes above our premium level, just wicks below, so it wicks slightly below the premium level, and then closes above it, which indicates to us that there might be a strong buy in place. So I'm going to remove the Fibonacci. I'll drop the Fibonacci numbers on the channel soon enough. And then from here we get our first buy signal. Like I said, you'll wait for the entire level where price indicates to us on the 5 minutes. So as you can see, something interesting happens over here. So if you look over here, you can see that the super trend starts exactly where the 5 minute starts, to indicate to us that there is buys ahead. So as you can see, the super trend and the 5 minute indicator starts at exactly the same time. There's no delay in when it pops up. So this one doesn't pop up sooner or it doesn't pop up later. It pops up exactly the same time as the super trend pops up. So what I'm going to do at this point in time, I'm going to mark out the level or the entire candle that says buy to us. I'm going to call that an order block, and then I'm going to wait for price to tap back into that level, and then we can target the previous highs or the highs for take profit, right? Stop loss below the previous low. Always remember that. Stop loss is below the previous low or the previous high, and you can target the highs for take profit or the previous highs for take profit. Right, so let's do another example. I'm going to remove all the drawings and things that I'm doing. So since we just need to identify when price shifts character or when the market shifts occur, and then from there it will be a bit easier to identify or take trades or fall contracts from there. So other than that, we do not get another buy signal here. We do get another buy signal to the right side of that, which is over here. Right, so this is something that I also wanted to mention, is that the buy signal pops up way before we actually have to buy, which is okay as well. It's not a problem since we know that the super trend is indicating to us that it is a buy. Even if this one pops up very early in time, we still have the super trend indicator on our side. Let me just get a better one over here. We still have the super trend indicator on our side that indicates to us that it's still to the buys, right? It's still on the buy side of the market. However, this sometimes can cause a bit of panic, because if you turned on the sellers on the super trend, you would see over here, you would see over there is a red line which can make you panic at the time. But since we know that price has shifted character or market has shifted structure, we're not going to panic too much, because we've already established that there is a market shift in place and we only looking for buys at this point in time. So we're not going to panic. And from the super trend indicator where we put our buys, or even if you put your buys a bit earlier, your stop loss would still be at exactly the same place, right? So entry point at this point in time, stop loss goes below the previous low. You can either target the high, or you can hold to whichever order block to the right side or to the left side of the market there is, right? So there's no need to panic. I hope this is easy for you guys to understand. And then if you look at this pattern over here, this has got nothing to do with the indicators. Like I said, this indicator will bring you at least 60 to 50% win rate if you're struggling to make any profits in the market. This indicator will bring you at least 60 to 70% win rate. We say 50, 60, 70, around there. The rest is all knowledge and patience that is going to make you money in the markets. Over here we have a pattern from ICT. So you can see over here we have a move to the upside, we have a pullback, which is where we took our buys. Then we have another move to the upside, causing a bit of liquidity moving to the downside, right? So this is an ICT model. Then we have a slight liquidity grab to the upside, a pullback into the downside, taking out all the previous liquidity price formed, and then continues to move to the upside, as you can see. Right, so I hope this video was easy for you guys to understand. These are the two indicators that I use often with my strategy, which gives me at least 80 to 90% win rate. I hope this is easy for you guys to understand. If this video was informative to you, please drop a like and subscribe. Ask any questions that you want in the comment section and I'll answer to the best of my abilities. I will see you guys in the next one. Peace.